we're meant to be the takeout vehicle for NTT GDC's stabilized assets. So, to me, it's quite interesting. A lot of development capital have gone into data center sector over the past several years. Now those projects are coming due. How do you find a home for those, development projects and all the capex that have gone in? Because the economics are very different. You're looking at development projects, you're still building to a high single digits, low double digit development yield, and then you can sell that at, call it, mid high single digit yield cap rate. So that's quite an attractive development margin. But once data centers are stabilized, and especially if your main tenants are hyperscalers, you're locked into a 10-year contract, minimum escalation. So the growth profile is not as strong. So the economics are very different. So how do you solve for that? So that's interesting from our perspective. So I think that's why REITs make quite a interesting, it becomes an interesting takeout option for some operators. So that's that. And then for us, it becomes a balance of having a global diversified portfolio over time. So most of our data centers right now, the IPO portfolio has been mostly cloud use workload with some inference workload. But then over time, we want to acquire more AI inferencing type work data centers, a larger scale, and a modularized retrofitability data centers as well. I think that's one key area, criteria. The other one is balancing growth versus stability. Because we are a REIT, we're meant to provide a stable yield plus some growth. The growth will come from rent growth plus acquisition growth. And so that's how our main strategy. And so if you just have a hyperscale dominant portfolio, we're going to be hard pressed to deliver growth beyond 2 to 3%. So that's why at the GDC level, they have a conscious allocation to co-location tenants. So their lease terms are shorter, and then they can capture some of the market rent growth that all the data center markets are seeing right now. So if you balance out your tenant lease profile, I think that's one way to try to generate growth in your portfolio. So that's a conscious effort, both at the sponsor level and at the REIT level. And then, of course, the other acquisition lever is acquisition growth. So all of our sponsored GDC pipeline is under our right of first refusal. So we do have the first look on all the data centers that GDC wants to divest. And so by acquiring those assets accretively, so that's going to be another source of growth. So that's our basic strategy.